Hello, I'm Bernard Hickey from interest.co.nz and welcome to 90 at 9. This is your morning briefing where you get everything you need to know in 90 seconds at 9 o'clock. Starting now with news that Business New Zealand CEO Phil O'Reilly has called for a cut in the official cash rate. He says the economy is slowing and it's time for the Reserve Bank to help the business sector, in particular manufacturers. He says it's not about the high New Zealand dollar. He's pointed to the slowing economy and across the Tasman at the Reserve Bank of Australia's cut in its official cash rate earlier this week. Now financial markets are actually seeing the Reserve Bank cutting our official cash rate by 25 basis points over the next 12 months. And wholesale interest rates, we call them swap rates, fell 5 to 10 basis points yesterday. We're now looking at lower interest rates for longer. In fact, the 2-year wholesale interest rate is just on 2.5%. That says markets aren't expecting the official cash rate to rise until late 2014. The New Zealand dollar down slightly, 81.8 US cents this morning, partly on these lower interest rate expectations. However, it is still over 80 Australian cents. Just a reminder, the governments of both colours, central and local, are borrowing heavily at the moment. The NZDMO is going to borrow $2.25 billion today, and yesterday the local government financing authority borrowed just over $250 million. That's about $500 million of government borrowing inside 3 days. 60% of that borrowing is from foreign sources, and that's helping to keep the pressure upwards on the New Zealand dollar. Also, we're seeing a rising New Zealand stock market. It's at 4-year highs, and there is property buying in Auckland by foreign investors as some of that money printed in the rest of the world looks for places with higher yields. That includes New Zealand. US stocks were flat overnight. This is after US private sector jobs were slightly better than forecast, and the services sector was also better. This served to offset some very weak figures out of China again. The services sector, the weakest in September since early last year. China is having a hard landing. This is affecting expectations for interest rates, lower for longer. I'm Bernard Hickey. That was 90 at 9 from interest.co.nz.